Just when you think the housing market couldn't get any more interesting, it does. Right now, there's a lot happening, and buyers and sellers are about to face two major changes at the same time: 50-year mortgages and a new push to buying a home without a traditional credit score. And you're probably wondering, is this really going to affect home prices? I'm glad you asked. So let's break down what this actually means if you own a home in Florida or anywhere in the US. These changes don't just affect buyers, they can affect your home's value, your selling timeline, and even how confident people feel about the market. And when buyers' confidence shift, prices shift. So today we're going to talk about what that really means for you. First, let's talk about the 50-year mortgage, the one that everyone's buzzing about. At first glance, it seems like a way to make homes more affordable. But stretching a loan over 50 years comes with trade-off you might not notice right away. Here's a little history to put things in perspective. The 30-year mortgage has been around since the 1940s. After World War II, the government wanted to get construction going again and to help families buy homes. By the late 50s, though, it became the standard. Easy to qualify for, predictable, and even today, over 50% of buyers still go with it. But here's the thing, these loans are front-loaded with interest. For the first 15 years, most of what you pay goes to your interest and not the actual loan. And since the average homeowner only stays in their house for about 12 years, most people barely make a dent into their balance before selling. Now, let's bring this closer to today. Loans extending from 30 to 50 year only increases affordability by 8%. Compare that to going from a 15-year loan to a 30-year loan, which increases affordability by 34%. So the extra 20 years is a tiny gain, but a massive interest cost. So you're basically paying to stretch your payments, but the math just doesn't add up. Now, I'm not a mathematician, but here's an example. A 500K home at 6% interest for 30 years equals to $3,000 a month. A 50-year loan at 7%, that's going to equal to $3,015 a month. That's actually more per month, not less. And keep in mind, your equity barely grows. If home values dip even a little bit, you could end up underwater. Sellers, this matters because when buyers aren't confident, fewer of them step up, homes start to sit longer, and prices can start to feel the pressure. Now, before we dig a little deeper, let's talk about Fannie Mae's move to eliminate minimum credit score. Now, they're saying if you've paid rent, handled your bills responsibly, and you have shown financial responsibility, you deserve to be evaluated differently. Lenders are now looking at alternative credit indicators like rental history, banking activities, and payment patterns. This is supposed to get more buyers in the game, but it also opens the door for more risk. Adjustable rate mortgages are creeping back up. Applications went up 10% in September 2025. Combine that with lower credit requirements, and buyers could overextend while sellers could face longer time frames or even price adjustments while homes are listed. So why does this even matter for sellers? Here's why this actually matters for you as a seller. Because these changes directly influences your home value, how fast it sells, and the price buyers are willing to pay. Let's start with the 50-year mortgage. On paper, you might think, wow, more buyers could afford my home. But remember the math, affordability barely increases, and buyers are taking on way more interest over time. Because of this, many will think twice before jumping in. Some might even delay buying because they will be worried about being underwater if the home values dip. Fewer confident buyers equals smaller buyer pool, and smaller pools often mean homes will sit longer on the market, or the seller will have to adjust their price to attract buyers. Now, throw in Fannie Mae no credit score move. Now, this could bring in more buyers who wouldn't normally qualify. Sounds good, right? But these buyers might be riskier. Higher chances of falling out of escrow, needing more negotiations, or struggling if rates change. So, while the buyer pool technically grows, the quality of buyers shifts, which can affect your timing and your price. Put it together and you have fewer strong buyers from the 50-year mortgage and riskier buyers from the no credit score rule. That means sellers could face longer listing periods, more back and forth, and even potential price adjustments. Knowledge here is power. In a market like this, it could mean the difference between selling quickly at top dollar or waiting months and adjusting your price. All right, buyers, here's what you need to think about if these changes happen. First, the 50-year mortgage might give you the impression that you can afford a bigger home or a lower monthly payment. But here's the reality. Extending a loan from 30 years to 50 years barely increases affordability. Remember that 8% we talked about earlier? Tiny, right? Now compare 15-year to 30-year jump, which boosts affordability by 34%. And don't forget interest. The longer the loan, the more you pay overall. Your equity grows slowly, and if the home prices dip slightly, you could end up underwater in just a decade. And then there's Fannie Mae no credit score rule. On one hand, it does give you a chance if your traditional credit score isn't strong. But remember, lenders will look at rental history, payment patterns, and banking activity. Sure, this gives more people a path to buying, but it also means that you have to be extra aware of the fine print. Adjustable rate loans are creeping back, and that can change your monthly payments down the road. So, if you're a buyer, just slow down and look at the big picture. What could your payment look like later? How fast will you build equity? And will your budget still feel comfortable if things change? All about protecting yourself long term. Okay, so let's break this down because I know some of you are thinking, well, hey, a 50-year mortgage and no credit score sounds like it could help me. And here's the thing, it's not as simple as it looks. First, the pros. Yes, there are a few. On paper, it gives buyers a chance at slightly lower monthly payments. And more people might get into the market who couldn't before. I mean, it sounds good, right? That's the appeal everyone's talking about. But here's where the reality kicks in. For the 50-year mortgage, it barely increases affordability. You're basically getting tiny gains for stretching your loan 20 years. And the interest costs, they will explode over time. And your equity grows so slowly that even if home values dip just a little, you could end up underwater. Imagine selling your home after a decade and then you realize you barely have any equity. And the no credit score rule, Fannie Mae wants to open up the doors to more buyers, which sounds nice. But it also means that buyers could overextend themselves. And if people can't afford their homes and adjustable rate starts rising, sellers are the ones who will feel it. Homes are going to sit longer on the market, buyers can hesitate, and prices will need to be adjusted. That's the ripple effect. It doesn't just impact buyers, it impacts all of us who are trying to sell or move. Here's the thing though, these ideas aren't necessarily bad, they just sound easier than they really are. They're supposed to help with affordability, but the math and the reality shows a different story. Buyers and sellers could face a more volatile market, kind of what we saw in 2008. That's why it's critical to be informed now. Bottom line, if you're thinking about buying, selling, or just planning for the future, stay informed and don't let the headlines fool you. Understand how these changes really affect your monthly payment, your equity growth, and the buyer pool. Being prepared now can save you thousands later. Trust me on that. All right, here's where everything really comes together for you as a Florida homeowner or seller. More buyers equal more showings. Even a small shift in affordability can create noticeable activity. In cities like Miami, Fort Lauderdale, Palm Beach, Orlando, that means more foot traffic, more showings, and more people thinking about making a move. And even if the loans aren't perfect, buyers are still testing the waters. Stabilized prices. When buyers stay active, sellers don't feel like they have to slash prices just to get attention. That's huge. When buyers feel confident in the market, homes hold their value longer and sellers are less likely to face price reductions. Good listings will still win. Let's be honest, homes that are updated, priced right, organized, cleaned, and well presented will always attract stronger offers. It doesn't matter how complicated loans get. Presentation wins every time. Think of it as your edge in a shifted market. Florida does have some unique pressure points. Now, even if the loans get slightly easier, don't forget about Florida specific costs. Insurance, property tax, HOA fees. These will still impact what buyers can afford monthly. So for the sellers who will keep these factors in mind, they're the ones who will outperform the rest. All right, let me be real with you. I don't think 50-year loans actually solve affordability. And here's why it's a bad idea for most people. First, the math just doesn't work in your favor. Extending a loan from 30 to 50 years only increases affordability by 8%. That's it. Meanwhile, the interest you pay over the life of the loan skyrocket. Most of the early years go almost entirely to interest, which means you barely build equity. And if home values dip, you risk losing a lot. Second is the monthly savings. It's tiny. Or in some cases, you're not saving at all. For example, a $500K loan at 6% for 30 years is $3,000 a month. Compare that to a 50-year loan at 7% is going to be about $3,015 a month. That's actually more per month in some cases. So you're paying longer, risking more and gaining very little in affordability. Third, it encourages risky behavior. Combine this with Fannie Mae eliminating minimum credit score and the rise of adjustable rate mortgages, and buyers could easily overextend themselves. And that's when sellers might face longer times on the market. Now, I'll give credit where credit's due. For buyers who know exactly what they're doing, plan to sell in a few years, or financially very strong, it could give them some flexibility. But for most people, it's not a safe move. So bottom line, 50-year loans are a gimmick at best. They sound appealing on the surface, but they do come with hidden risks. They don't fix affordability, they don't help equity, and they could actually backfire if the market shifts even a little. For sellers, though, there is a silver lining. The market keeps moving, buyers are still active, and if you position your home correctly, you can still benefit. You just have to understand what's happening behind the scenes so you're not caught off guard. Okay, Florida homeowners, if you've been thinking about selling in the next 3, 6, or 12 months, now is the perfect time for you to start planning. Why? Because understanding the market today can set you up to get the best price tomorrow. And that's exactly where I come in. Whether you're in Miami, Broward, or Palm Beach, or just nearby, I can help you walk through your options. Even if selling isn't on your immediate radar, we can figure out what your home is really worth in today's market, so you're prepared when the time comes. It doesn't have to be complicated. It shouldn't be stressful. You just need a clear plan. You can send me a message or click the link in the description and I'll personally reach out to guide you. If this video helped you make sense of what's happening in the market, let me know in the comments what you think about the 50-year mortgage. All these new laws and changes, including the 50-year mortgage and the credit score shift. Property taxes are another piece of the puzzle that every Florida homeowner needs to understand. To see how they impact you, make sure you watch my property tax video. Before you go though, I want to hear from you. What is your biggest question or concern about selling your home right now? Drop it in the comments below and I'll make sure to answer. And remember, you don't have to figure out this market alone. I'm right here with you every step of the way. All these changes, the housing market, new laws, and everything else life throws at us, it's easy to feel unsure about what to do next. I want to share a couple of scriptures that really help me stay focused and encouraged. Psalms 32:8 says, I will instruct you and teach you in the way you should go. I will guide you with my eye. That's such a comforting promise, even when things feel unclear. God is watching and guiding every step. And Isaiah 30:21 says, your ear shall hear a word behind you saying, this is the way, walk in it, whenever you turn to the right hand or whenever you turn to the left. That's a reminder that God's guidance is available. We just need to pay attention and trust it. So today, whether you're thinking about selling your home or making a big decision or trying to figure out what's next, take a moment to pause, pray, and ask for clarity. Listen to that gentle voice and trust that you're not navigating life alone. Because even when the path isn't perfectly clear, He is walking with you step by step. If you're a homeowner in Miami and thinking about selling, don't wait. Now is the time to get the best price in today's market. I've put together a free guide to help you understand what your home is worth and how to sell smart, making sure it makes sense financially before you list. You can grab the link in the description or you can reach out to me directly if you're ready to sell. I'll walk you through your options and help you plan every step. Thank you so much for watching and I'll see you in the next video. Bye.